Folks, we have to talk about the Fed interjecting into the overnight repo market. On Friday, while we were celebrating Halloween and passing out candy, the Fed interjected over $50 billion. This is the largest injection pre-COVID. So again, a long, long time. Is this just a one-day anomaly given end of month, or is this a sign that there are tons of cockroaches and liquidity is drying up and we are on the cusp of something nasty breaking? We're going to talk about this. We're also going to talk about the best 3 months of the year, the S&P 500 perhaps hitting towards 7,000, that and more with Mr. Dan Bird. How you doing, buddy?
I'm doing well. Happy Halloween.
Yes, happy Halloween. Halloween is my favorite holiday. I love to hand out just handfuls of candy.
Do
I'm
you
seeing
do
the
you hand out candy?
absolutely,
You get trick or
absolutely.
treaters?
Yes, yes.
I don't
We're
I don't know anymore. I live in Florida, so
yeah, kids aren't allowed.
kids aren't don't exist here.
That's funny. No, we live in a gated community and on a hill. So what parents do here is they drive the kids up to the top of the hill, and then the kids
And
walk
roll them
down
down.
and
Then they roll
yeah,
them
and
down.
roll them down. No, we must have had I think we had 50 kids this year, probably maybe 50, maybe 60.
Wow, that's
And yeah,
amazing.
I give out handfuls. Kids smile, parents freak out.
Do you,
It's
do you
like the
give them
best of
the
both
do you give them
worlds.
the full size
I've
bars?
done that before. So I've done last year we did full size candy bars, but the kids don't really react. But when I hand a handful, like literally a handful of like the little, Snickers and
Right.
Milky Ways, their eyes light up. So I'm just going to do the big handfuls. They like that
Uh,
better.
Interesting. Yeah. Well, I'm also in a gated community, but here in Florida, they post which houses actually have candy and which ones
Yeah,
don't,
yeah.
so they don't have to waste their time.
There you go. There you go.
Yeah,
Well, let's
I
talk
used to
about what
love
happened.
I used to love
Let's
going to the townhouse communities because you can get
yeah, just hit them up. Yeah,
hit a lot of really quick.
yeah, yeah.
That
Well,
was
let's
the
talk
fun.
about $50 billion interjected on Friday. Really quiet, really below the radar. It was end of month, so you just never know if that was the reason. But this is not good. The Fed having to buy, I think it was like 28 billion in treasuries and 30 billion in MBS. It was a big number.
Yes, it was. However, it was not unexpected.
Okay, tell us more.
I mean, the Fed's been seeing this coming for a while, and they talked about it in the past as well.
Hmm.
They said, once that repo window gets down to, I think it's ample. There's ratings, right?
Right.
So
Yep.
ample is the second from the top rating.
Yep.
When it gets down to that, they were expecting to have to inject
Yeah.
some
Well,
money
Fed
into.
President Logan on Thursday said, and I quote, if the recent rise in the repo rate is not temporary, the Fed will have to buy assets.
Right.
So they told us this was coming, and boy, did they buy assets on Friday.
They did. I'll show you. Let me share my screen real quick. I'll show you an
Hmm.
interesting chart from the Fed's own website, Fred.
Cool.
This is my website for those that are interested. Breakpointtrading.net, and my YouTube channel is right here. I try to do one every day, right around noon East Coast time, and the newsletter's here as well. But let me show you here's the chart I was referring to.
Hmm.
So they've seen this. It's not like a big surprise. See, overnight repo
Hmm.
basically dropped to zero. I mean, it went up because of COVID. Everybody was staying home, putting money in savings in the bank. Lots of people putting money in the bank, and then of
Sure.
course we're going back to normal. So this
Hmm.
is just like everything else. One thing that hasn't happened in 100 years is a 100-year pandemic.
Yeah. So we shut
So
the country down. Something happened, and now we're just regression to the mean. That's kind of the story here.
exactly, that's right.
Okay.
And the Fed has known that this is coming.
Hmm.
Now, if it continues, like the Fed president said, if it continues and it's not temporary, then that could be a problem.
Yeah. That's
And the fact that more and more banks are coming to the repo window to get that short-term um, funding could be concerning as well if that
yeah.
continues.
Yeah. So what I told my audience to do is this is it's not an earth-shattering warning just yet. Lots of things could drive this, as a
Right.
point in time. But if this continues day in and day out for the next several weeks, and shoot, that And to your point, the list of banks grows. That's a problem.
Right.
Would you agree?
Yes, I agree. And so the thing to watch is watch the banking sector, of
Mm-hmm.
course,
Okay.
and see how that's doing. One place you can do it on my website on the market bias page. These are all the asset classes,
Mm-hmm.
indexes, sectors, industry groups, intermarket relationships, commodities, metals, and currencies. And one of these is banks right here. There's charts for each of those.
Mm-hmm.
So this is the banking sector, KBE. This is an ETF for the banking sector.
So this is Wall Street, big banks, little banks, community banks.
Yeah,
It's all in there.
this one is big banks. KBE, KRE is regional
Got it.
banks.
Got it.
So
Okay.
we'll look at the regional banks because that's where this will probably
Yeah,
affect.
that's where the
This,
pain is. Yeah.
right. I mean, they both look pretty much the same right now.
Interesting. Yeah,
Pretty
you're right.
pretty similar, right? If you look at this on a longer term basis, it's nowhere near the. I mean, the April. This is just April this year. It's not even close to that.
It's quite a
Sitting
move,
right on
yeah.
the 200-day moving average. So there's not a lot of concern yet
Mm-hmm.
with the banks. It will show up here. I mean, Wall Street will telegraph when they're getting concerned.
Okay.
And
Good to know.
most of the banks have reported earnings or in the process of reporting earnings. All the big ones, of course, have
Oh, the big ones are done. Yeah.
already.
Beaten up.
So
Yeah.
earnings in general have been coming in pretty well.
Mm-hmm.
So that there's lots of tailwinds with the market
Well,
right
let's
now.
talk about the tailwinds, right? We've exited October, entered November. Typically, this week, you and I would be talking jobs. Unfortunately, of the three jobs metrics, we're only going to get one, which is ADP. I think that is
Yeah,
on Wednesday. ADP last month, ADP was negative 32,000.
right.
We're not getting JOLTS. We're not getting Bureau of Labor statistics. So normally we'd be talking jobs this week, but what do you got there? Looks like layoff announcements are growing. I mean, there's the job market doesn't appear to be kind of strong. I don't think.
No, I agree, and I think everyone recognizes that. I think the Fed recognizes that they said it in their narrative in their meeting, the FOMC meeting.
Mm-hmm.
So yeah, I don't think anyone's expecting jobs to come in very strong. In fact, the surprise will be if it comes in a lot more negative. If it's much below zero, I mean it could be below zero, but if it's a lot below zero, then that's going to be a big surprise. Now we're not going to.
So let's
it,
try to put a number on a lot below zero, just for fun. Are we talking 50,000 negative? What's a lot? Is it just a repeat of last month negative 32? What's a lot?
I think it would have to be more than 50,000 negative.
Okay, so something more than 50,000 negative
Right.
ADP on Wednesday is
And I think the unemployment rate, which is what I'm more interested in, would have to be more than 4.5% or more.
Yeah, and we won't get that. That'll be part of the BLS, which will not come out on Friday, at least currently won't come out. But let's talk about the shutdown since we're there, right? Shutdown's getting really close to what I said, Dan, 35 days. In
Yeah,
fact, I
yeah.
think
I think
Tuesday will be
I think
doing
it's going to
35.
be the longest shutdown in history. I think Democrats want that narrative. They want to say Trump is responsible for the two longest shutdowns in history.
Yeah, yeah. Well, they can already say that technically, but they do want to make this one longest. The current rumor out there is they're going to wait until after Tuesday's election cycle, and then,
Right. Yeah.
but others are
Which
talking
is
about it could go all the way to the end of November.
um it could.
That would be wild. That would be
Yeah.
wild to go to the end of November.
I just wonder. I don't know. I don't know. It's baffling to me what they're doing.
Yeah. Well, let's move on from politics.
Just
Politics is no fun.
baffling what the Democrats are doing. I just don't get it.
Sorry, we'll move on from that. So, what do you got for this week? Let's talk about tailwinds because again, I think, frankly, I think the Fed interjecting in the overnight rate could actually be a tailwind because that'll be buying assets. It'll drive down rates, lower rates, asset prices. I mean, this. I actually sent out a tweet the other day when Logan's quote came out, and I said, "I can hear the money printer warming up."
Yeah. Right.
That's what I took from that quote.
I don't think it's going to happen that quickly.
No, I don't either.
I
but
think
I can
they're going
hear
to
it.
need a lot more. They're going to need a lot more data. And
Okay.
and by the way, and I think you mentioned this on your show too, that the percentage for a December cut have changed significantly.
Yep.
I didn't bring it up what it looks like today, but
70% as of yesterday. So
70%. So that's even lower than it was.
yeah. So
When
it
I
was
looked at
95, and now it's
Yeah.
70. But I'm actually shocked it's not below 50. I mean, with how hawkish Powell talked about it,
Yeah.
it's
Yeah. I
crazy.
mean,
Actually, I have a bunch of Fed.
interestingly, I mean, I watched his speech, and yes, he did say we're not on a set path. There's no guarantee there'll be a cut in December. In
Mm-hmm.
fact, quite the contrary, or to something
Yeah,
to that
there's
effect.
something that, yeah, yeah. Well,
Um,
one of the things that's becoming very obvious is I think we have a very split Fed.
right.
Here's just some quotes that I captured in the last 48 hours. Fed President Hammack, I would have preferred to hold rates steady this week. Schmid, a rate cut now could question the Fed's commitment to 2% inflation. And there's more like that. I think there's plenty of Fed members that don't want to cut. And there's obviously Christopher Waller and the new Fed guy. He wants to cut Moran, I think, or Moran. But I think there's
Mhm.
plenty of Fed people that don't want to cut.
Yeah, I wonder what those narratives would have been if we actually had the jobs numbers.
I don't know. I think more and more Fed presidents think we're at neutral. I mean, I think more than half the Fed presidents, Dan, think the job market's solid. I really do. I really think the Fed presidents are looking at this going, we've been above our 2% target for almost 5 years.
Yeah.
We're not close to it now. It's almost three. And they're like, are we going to do this or not? And they're looking at a full employment.
They're right. They're right. The job market, as far as they know, is solid
Mm-hmm.
because we don't know. We don't have any data.
Well, we
So
have data. We have private
we have
payroll data.
some data, but
Yep.
the data we have is not looking that great. But in general, the job market is not crashing either yet.
Oh, yeah, it hasn't rolling off a
But
cliff.
like we've talked about many times, it accelerates very quickly once it
It,
starts.
yep. Elevator up, stairs down.
Right.
Yep.
So that's the problem. That's the issue. But in the absence of data, then I can't disagree with them. I think it is
Oh, I can
inflation
disagree
is
with them.
is the key.
Well, okay, let's talk about that. Because again, one of the things that bothers me with the current CPI calculation is how they calculate shelter.
Right.
Shelter is 33% of CPI headline, and they are using a rolling, calculation for shelter. I mean, for
Mm-hmm.
example, shelter in the latest report came out last week, 3.6. If
Mm-hmm.
you look at actuals, which is the world I live in, rent inflation, houses and apartments is below 1% nationally.
Mm-hmm.
So, Dan, if you simply correct for that mathematical error, CPI headline is 2%. They won. They're done. Just correct the error.
Yes. However, that can't
However,
be that cannot be a one-off discussion.
no, it can't be.
Can't
I'm
you
saying
can't
I'm
you
saying
can't
change the
correct
formula.
you can't correct for the error one time.
I agree.
Or let's put it a different way. If you did correct for the error, then you would have to go back and correct it all the way back.
I say
In
go
other
back.
words,
I say go back years.
in
That's
other
fine
words,
with
the
me.
number is relative. It's a relative number, right? So if you correct for it now, you've got to go back and correct for it all the way back, and then
Works
look
for
at the
me.
trend of all those numbers.
Works for
So
me. What would you see? You would see that rent was underreported for 2 or 3 years, which it was during COVID. Rent was underreported, and now it's
right,
overreported. I have no problem admitting the Fed, for decades did the best they could. We did not have real time information. We
right.
do now. The data is out there. It's time for the Fed and all their silly PhDs to realize that the old way of calculating shelter is fundamentally flawed. And they're hurting
Yeah.
themselves and hurting the American people by being stubborn and stupid.
How do you feel about
Yeah, I could have gone worse, but I decided stubborn and stupid was worse enough.
that? Yeah, I mean that's true, and I think maybe the new Fed president, you know, chairman, when he comes in,
Mm,
will correct for that.
maybe
But
that's a good point.
it can't be a one-off discussion.
Oh, I
If
agree.
they if they correct for it, they have to say this is the dividing line right now, whether
Mhm.
it's November, December, whether it's May when the new one comes in. We are now correcting for it, and this is how we're going to look at CPI from this
And oh,
point
by the
forward.
way, here's the last 24 months corrected for this new calculation. Totally fine
Right,
with that.
right,
Totally fine. I'm
yeah.
okay with that.
But that's how it needs to be done. But as where we are right now, we're
Hmm.
looking at a relative number
Yep.
over some period of time based on the calculations that they're using. So
Yeah,
that's
I'm okay
that's
with
what we
that.
have to look at.
Yeah.
Having said that, that means that the CPI came in at
2.9.
2.9.
No, 3.9.
No,
No,
it came
three.
in
You're
at
right.
3.
Three.
Came in at
Three
3.
instead of
Supposed to
3.1.
be
You're right.
3.1. Came in at
You're
3.
right. You're right.
Which was the same number that was last February.
Correct.
It was at 3.
Mhm.
So inflation basically hasn't done anything. It went down and came back up.
Yep.
Since February.
Mhm.
Right. Now, interestingly, it came in lower than expected.
Mhm.
This is kind of the weird thing about it. Comes in lower than expected, but higher than before.
Yeah.
And the market liked that
It did.
because it was lower than expected. So maybe they should just set their expectations really high and they'll be happy every month. Right. I mean, to me, it wasn't that great that it actually went higher, but
Mhm.
according to you, it should be 2% anyway. So
Yeah.
who knows?
Yeah.
In general, that is a tailwind as far as I'm concerned. That is pretty much tame inflation is a
Mhm.
tailwind. Lower rates is a tailwind
Mhm.
for the market. Talking about the stock market.
Yep. You have the end of the year, which is typically pretty good.
And
Christmas
end of
rally
the
ahead of
year, we're
you.
looking at
Yeah.
November right now. This is a historical view of November. End of the year starts the best 3 months of the year.
Look at that.
Starts
Yeah.
Monday.
Yep.
So that's a tailwind. We've got another CPI report on the 12th. Jobs number, who knows if we'll have that or not? Probably
Not.
I think even if they ended it on Wednesday, I'm
No,
not sure they'd
couldn't
have
get it.
enough time
No,
to
they
do
couldn't
it.
get it.
So
Right.
we probably won't have a jobs number. And then options expiration, but there's no Fed meeting this month.
Correct.
So next Fed meeting will be in December.
10th and 11th, I think.
So not really a lot of data to go by. Although, interestingly, and actually, let me show you the next two charts here real quick.
Mhm.
Here's the best 3 months performance.
Oh, wow.
Notice NASDAQ is the green one.
Mhm.
So we're just beginning that November to January, best 3 months of the year. That's a tailwind
Mhm.
for the market. And here is what Stock Traders Almanac, with their historical data, shows potentially a monster Q4 rally.
Now, is that your quote, Monster Q4 Rally, or did they
Now
put that on their chart?
that is their quote. That
That
is
is their quote. Hello.
that is Stock Traders Almanac's quote.
Wow.
With a question mark at the end of it.
All right. Yeah. Fair enough. Question mark. Okay.
Right. So the green one is post-election years, which is what we're in. The pink one is the aggregate cycle, and the black one is all post-election years. So these are basically post-election years.
You know what's crazy is we're on the cusp of having 3 years in a row of 20% gains.
Yes,
That's wild.
that's right. 3 years in a row.
Yeah.
Guess
there's going to be a lost decade in there somewhere. That's crazy.
there will be. As soon as we get to the next secular bear market, there will be a lost decade.
Yep.
But we've got 4 or 5 years before that happens.
Okay.
As I've been saying over and over again.
Yes, you have. For
we
4 years, you've been very consistent.
Secular bull market. We've got until 2029 or 2030, somewhere around there.
Mhm.
Now, could it happen before then? Absolutely.
Sure. Yeah.
Could happen before then. But we've got, I think we are in a bull market, and I don't think anything's slowing that down. Now, that bull market is driven by just a few names.
Yeah.
Right? The Magnificent Seven. Let's see. How do I want to do this? I want to show you. I'm going to show you the difference between the cap weighted index and the equal weighted index.
Okay.
All right. So we'll start with the S&P. So cap weighted basically is based on market cap, and the top 12 names, Magnificent Seven plus the large cap tech stocks. Top 12 names make up about 55% of the whole index. The whole index. So there's 500 stocks in there, and the top 12 make up about 55%. All right. Now, if we look at just the equal weighted, that looks at all of the stocks in the S&P 500 on an equal basis.
Correct.
All right. So that gives us a sense for what's
Let
really
me guess.
driving.
One chart's up and one chart's down. That's my guess.
Well, the second panel here is the absolute performance of the S&P versus the equal weighted. And they basically are running side by side.
Yeah, it's not bad.
But that's kind of what you would expect from absolute performance. If you look at relative performance, meaning you start them both at 0 at the beginning of the year, now you can see the S&P is outperforming the equal weight.
Yeah, I thought it would actually be more dramatic than that, but okay.
Well, if you want to look at what's dramatic, and this is the better way to look at it, is look at relative, year-to-date relative. So this is basically taking the S&P divided by, the equal weight divided by the cap weight.
Got it. That's the one I want.
All right. That gives you which one is outperforming the other. And in this case, the pink line is the 0 line. So if this is moving down, since we have the equal weight first, that means the equal weighted index is significantly underperforming the cap weighted index.
That's what I would expect. Yes.
Right. And this is actually a better way to look at it rather than these other two.
Okay.
All right. So that's the equal weighted. That's for the S&P. The 0 point, if it was at 0, like it was right here in June, came back down to 0. Notice here the equal weighted was actually outperforming the cap.
That was around April. Yeah, that would make sense.
Yeah, February to April when the market was crashing.
The
equal weight was outperforming. That's because the cap weighted names
went down less. Yes.
Where the cap weighted names went down more. The equal weighted went down less.
Correct.
Right. So that's what the S&P looks like. So what about the NASDAQ? You would expect that to look similar, right?
Maybe even worse.
So again, at the top, really the one to look at. In this case, we've got them both here now. So here's the S&P. It actually went below the 0 line back here in June. And the NASDAQ didn't go below the 0 line until August.
Oh, interesting. Okay.
But since then, it has accelerated to the downside, meaning more and more as time goes on, more and more cap weighted names are the ones that are pushing the market higher. Right. So this is going down. That means equal weight is underperforming. Cap weight is outperforming.
Got it.
All right.
Okay. Yep.
So all that is well and good as long as those continue to perform. If they begin to stumble, then we could have a big problem.
Got it.
If they're the only ones pushing it up. In fact, if you took them out, I think I saw a statistic on this. If you took those 10 names out, then the rest of the S&P would be something like down something like 8%.
Yeah, that's true. I saw it. I read it this weekend. Yeah.
Right. So these basically are the names that the top ones here, these top 12, these are the top 12 names in the triple Qs in the NASDAQ 100.
Yeah. NVIDIA became the first $5 trillion company last week.
Right. NVIDIA continues to perform, and their earnings aren't until November 19th. So they usually run up into earnings.
I heard their CEO say they have clear revenue. They can see revenue through 2026. That is wild.
Right. Yeah. Yeah. NVIDIA has already started to make its move into earnings. So I think I showed these charts last time. This is called a zigzag chart. So this is basically shows you the lows and the highs. And the reason I like looking at it this way is because it removes kind of the clutter of the everyday movement and basically just shows you whether it's putting in higher highs and higher lows or the opposite. So here's the beginning of the year in April when it was going down. This is NVIDIA. So NVIDIA is definitely outperforming. So it's at the high. Oracle is doing the opposite. Oracle now is going the other way after a big gap up. It's moving down and it looks like it might actually close the gap. So it's down below its 50-day moving average right now. Palantir reports on Monday. It's breaking out, going higher. Tesla going sideways, but still looks pretty healthy. Apple reported last week. had a pretty good report. It's continuing to go higher. AMD reports on Tuesday. AMD looks great, continuing to go higher. Amazon. Amazon actually, I didn't think Amazon would have a great report. I didn't think it would be a bad report, but I didn't think it would be great. But turned out it actually was pretty great.
Yeah, that and they announced, 14,000 layoffs.
Well, that too.
Mm-hmm.
But it's above its all-time high.
Mm-hmm.
So it
Yeah.
continues to move up. Here's Arista Networks getting ready to break out. Broadcom getting ready to break out. Now, when I
Wow.
did this a couple of weeks ago with you,
Mm-hmm.
all of these were struggling to make new highs,
I
struggling to get
remember.
back to their highs.
I
But
remember.
as you can see, this time Costco, of course, is not doing great. GE Vernova just going sideways. Google had a great report, broke
Broke
out.
out. Yeah.
So the
First.
difference between 2 weeks ago and now is that all of these have now broken out to new highs.
Nice.
Eli
Okay.
Lilly just had a big announcement, and they had earnings. It's getting ready to hit new highs. Meta was one of the flies in the ointment.
Uh-huh.
Meta missed, so it now is below its previous lows.
Okay.
So Meta could continue to go down. Microsoft, not a great report. It's sitting right on support right now.
Mm.
So Microsoft and Meta and Netflix. Those are the
Got it.
three out of the whole group that haven't done that well. But overall, all of
Yeah.
these have come in with good reports, good earnings. They continue to move the market higher. So
Yeah.
as long
Well,
as they hang in there,
let me ask you the $1 million question. Do you think your call of S&P 7,000 is still has a chance this year?
absolutely, no question.
And
In
what are we
fact,
sitting at now? I didn't even check Friday.
so
Or
here's the
look at Monday.
S&P. One thing I did on this particular chart is I put the expected move. I update that every Friday.
Mm.
But I also put in the call wall and the put wall. This basically is where most of the open interest for calls and puts are.
Mm.
So you can think of this as the ceiling or resistance and the floor or
Got it.
support. So it's right in between those.
Mm.
And then the flip line is where traders will either buy the dip or they'll sell the dip. Buy the dip or
Got it.
sell the dip. If it's below the
Okay.
flip line, they sell the dip. Right now, everything is right in the middle. Um, Gapped up on Friday and pulled back a little bit, but it looks really healthy right
Mm.
now. If we look at this on a wider view, just continuing to go higher.
Yeah. Look at
So
that.
can it hit 7,000? Absolutely. We can hit 7,000. No
Okay.
question. The
All right.
68.40 right now, that's only 160 points away. It could do that in 2 weeks.
Oh yeah. Easy. Okay.
And
Well,
going into
it'll
this,
be or
yeah,
something. 7,000. It's crazy. Good for you.
yeah, 7,000 easily. The guy from uh, Stock Traders Almanac,
Mm-hmm.
who I saw at the Money Show
Mm-hmm.
2 weeks ago, he is predicting 7,100.
Oh my goodness. All right.
And I said to him, I said, that's a pretty bold move, 7,100, because 7,000 is a psychological barrier.
Yeah, for sure.
And he kind of smiled and said, yeah, I know that. I'm going out on a limb and I'm saying 7,100.
Okay. Well, I like guys that make calls like that.
Right. So you can see right here, the call wall for the S&P is right at 7,000.
Hmm.
That's where all of the call interest, open interest is right now.
Yeah. Well, it's going to be fun to watch this again. Not a lot of data this month or these next couple of weeks. I am curious. At some point, the government shutdown will end. Let's hope
Yep.
sooner rather than later. It feels like the market's just completely blown it off. It doesn't matter. But would the government ending shutdown be a tailwind or is it non-event?
It will be a tailwind. It's right now it's a non-event.
Yeah.
The market doesn't really care that much what the government does. In
Mm.
fact, many times a a stalled government is actually better for the market.
Yeah.
Uh,
Yeah, it'll be
so
interesting to see what happens to our consumers. Obviously, by many accounts, I think they estimate $14 billion a day is not getting spent. So that will have impact on the GDP, at least for
well,
the quarter.
that's an interesting statistic because what are they doing? Is that because they don't have the money?
Yeah, I
Or
think
are
that's
they
what they're basically saying. Yeah.
are they pulling it in because they're afraid? They might not
No,
have the money.
I think this
I
is
mean,
general consumption that's not being done that would normally be done.
okay, because
So
I'm
a lot
thinking,
of that will get it'll be delayed consumption, but not all of it.
yeah, this is the retail
Yeah,
ETF.
that makes sense.
So, it's heading lower for sure. It's actually broke the support line.
Hmm.
So it's going down. One thing that's interesting is Bitcoin.
Hmm.
Look at Bitcoin right here. Bitcoin's kind of a bellwether for the Nasdaq for the rest of the
Sure.
market.
Yeah.
And notice it came down right. See this line right here that I drew across here?
Yep.
That's the support line. It keeps coming back down close to that, went a little below it here, and then it bounces and goes back up. So I was just curious, how far back does this line go?
Hmm.
So I went back to look at how far that line would go. And interestingly, you see it up here,
Oh yeah. Oh, look at that.
all the way back here to,
2025. Wow.
yeah, the beginning of the year.
Yeah. Oh yeah.
So that has been a very, very strong, it was resistance.
Mm-hmm.
Three times it couldn't get through it. And now it's very strong support.
Hmm.
And it's sitting right on the 200-day moving average. So this is a very critical point for Bitcoin.
Okay. So tell us what that means. So again, critical point means if it breaks lower, there could be a lot of room below, but it also could consolidate and gap higher from here. Is that what it means?
Correct. That's right. Exactly right. It's not doesn't really tell you which way it's going to go,
But yeah.
but it just says that if it does break all of the support, the 200-day, this support that goes all the way back to the beginning of the year, if it
Hmm.
breaks through all of that, then it's likely going to go maybe sub 100K.
Okay.
I mean, it could go all the way back down to this support level down here at 80 potentially.
Okay.
But on the other side of that, this could act as support, and
Hmm.
this is where it bounces and starts to head back higher again.
Right. Makes
So,
sense. Okay.
so we don't know. I'm just saying it's an important um, juncture right here for Bitcoin.
Very cool. Very cool.
Something to keep an eye on.
Well,
A
let's ask
couple of
this important question for you for the week. What's the one thing that, like, the most important thing you're looking at this week?
Now that the big tech names, except for Palantir and AMD, reporting on Monday and Tuesday, and I
Hmm.
expect that their reports are going to come in pretty well. It's how does the rest of the market, how do the rest of the names report
Okay.
in earnings? So earnings really is the key to see how that comes in.
Hmm.
If the rest of them come in pretty well, like the big tech names pretty much have,
Okay.
then
Huh.
it's going to push. It's absolutely going to push the market up to 7,000
Okay.
with no question. I mean, I
Very
think
cool.
there's lots of tailwinds right now, so the market is poised to go higher. Um, I actually put in, if we want to talk about mortgages
Sure.
for a second, I created this 35-year,
Oh yeah. Look at that.
actually 20-year mortgages. So there's where the 30-year is compared to the 10-year right now.
Hmm.
10 years actually going up,
Yeah.
interestingly,
Yeah. It did
but
go up since Wednesday. Yep.
right, but not significantly. I mean, it's still sitting around 4.1,
Hmm.
but 30 years coming down. So what are your thoughts on this?
Oh, it's the spread collapsing. And the mortgage spreads have been inflated for, I don't know, 4 years. And what we're
Mm-hmm.
seeing is the real estate, basically banks or lenders are getting competitive. And one of the ways they can do that is to lower the spread. So we're starting to
Right,
see that.
right.
It's all spread.
And and as that comes down, it should improve demand
Oh,
in the
absolutely.
market, right?
Yeah. I mean, I didn't check this weekend, but heading into last week, the spread was still 40 basis points higher than normal. And normal meaning 50 years of history. So
Right.
if you took out that 40 basis points, we'd be sub six, and sub six a game changer.
Yeah, well, sub six is not far away.
No, it's
And
not. It's 619 or something on Friday.
and
Yeah.
it's 617 right now. And
Or
actually
17. Yeah.
right here, you see that you see the dark line right here is the 30-year. So
Ah,
notice where it came down here and then started back up,
yep.
came down here, started back up. We're right there right now. So
Yeah.
if you look at that line right across there, that's basically 610.
Yeah. That's the magic number. We go below six, it's game over. It's game.
Right.
It's like, it's a psychological number.
Yeah. And it may drop significantly, may drop pretty quickly once it gets below
Oh,
six.
no, absolutely. No, it absolutely. Again, there's 40 basis points in additional spread that can come out. Even if you got half that, you're at 5.9.
right. I mean, I know a lot of houses around here have been sitting there for sale for a long time.
Mm-hmm.
My neighbor, there's been on the market for nearly a year
No, yeah,
without moving. So I think if it goes below six, I think a lot of those houses are going to start to move.
I think so. Yeah.
One last
Mm-hmm.
chart that was just an interesting thing. It's kind of a Bitcoin thing, but I
Hmm.
wanted to see the relationship with Bitcoin and MicroStrategy
Okay.
because they reported last week as well.
Oh, I missed that.
And this is the same kind of relative chart up here, like I showed
Hmm.
you before.
Yep.
If it's going down, it's MicroStrategy versus Bitcoin.
Hmm.
So if it's going down, then the first one in that equation is
Is
underperforming,
underperforming. Yeah.
or the second one is outperforming.
Right.
But
Okay.
MicroStrategy is so tightly tied to Bitcoin,
Yeah. It's yeah.
then you would kind of expect it to move the same as Bitcoin, but it's not. It's disconnected now
Hmm.
from Bitcoin. And down here, you can actually see these are the actual charts. Bitcoin, you can see the 50-day moving average. You can see the trend moving up with
Mm-hmm.
Bitcoin and decidedly moving down with
Interesting.
strategy.
Okay. That's
So
interesting.
this is going to be interesting to see how this plays out for Michael Saylor.
Mm-hmm.
This whole thing, if this continues, he's gonna have some big problems, I think.
Yeah. Well, it'll be something to watch. Again, we talk each and every week. You do a daily show on your YouTube channel, which is just must-watch TV if you're an active trader or investor. What is the website and YouTube channel?
Go to breakpointtrading.net is the website, and the YouTube is right up here in the upper right. You can just click on that. And the newsletter that I put out every weekend, usually by Saturday, is right there. A
Hmm.
couple of cartoons. Here's a
Love
here's
that.
a Halloween cartoon right there.
Love it. This doesn't scare him nothing. Well, that's good. I like it.
Interest rates going up.
Yep. Bank of Canada. That's funny. All right, Mr. Bird, you're amazing. Keep doing what you're doing. Keep having fun. Keep helping people. We appreciate you. Later.
You bet. Have a good weekend.
Yep.